I mentioned when we first started how we always look at the Japanese yen because it's one of these currencies that acts both as it reflects both risk on and risk off, and at times the movement in the Japanese yen can actually precede what may or may not happen in the indices. And I thought there was a really good example of it earlier today. Now, this is actually from my MT5 platform, and it's our specialist indicators that we've developed for the Forex market. I know our Forex program students will recognize them instantly. Now, what we're seeing at the moment, this is certainly on the hourly chart and on the 20-minute chart here, the great thing about the yen pairs is because the yen is always the counterparty currency, the pairs always move, they're always on the same side. So when they move on block, they're very easy to see in the movement. Now, what we can see here is they are moving lower. Now, for the indices and for equities, that's not really very good news because it means that the indices are possibly carrying on lower. There is more selling that is going on. The way we identify the actual currency, this is from the currency strength indicator. This is this magenta line. If I take all this off here quickly, this is easier to see. There we are. Now this was here. This was it was selling off when the indices were going higher, but let's just date stamp it. This says 1600 hours, but because the way the meta quotes timestamp the platform, this is not actually 4 o'clock, it's 2 hours earlier. So if we move down to my platform, my NinjaTrader platform, okay, at 2 o'clock, the market was buying the Japanese yen at 2 o'clock. And that alerts me to the fact saying, that's not how it should be, because at 2 o'clock, the indices were still going higher, and they were going higher quite strongly. Then we had a really nice shooting star, which was great, a great reversal candle, not a massive, reasonable amount of volume out on that one. And then we had this big down candle, a volatility candle. So there was quite strong selling. But what I'm trying to say here is you really need to look at related markets, because related markets can give you the heads up that something might be happening or might happen. And sometimes it can be quite disconcerting because you're seeing a strong move higher, as we're seeing here. This is the YM on 10 minutes. The ES was the same, then the NASDAQ was the same. And because we look at the Forex market and the yen is suddenly being bought, it's very easy to be a bit of cognitive dissonance here, because you've got to hold two very contradictory thoughts in your head. But it can give you a brilliant heads up of what may or may not happen. And in fact, it was also confirmed. You said you couldn't get a better signal than that. Where is it here? And that one there. Yeah, reasonable amount of volume under that. That was probably, it was going to be validated, and then bang, down it went, and with momentum. Don't forget, a lot of these traders would have been trapped up here because think, it's going higher. Because in general, the market has been going higher. It's been very, very positive. We can know why it's been positive because we saw the buying coming in earlier. That was on the NASDAQ, but we had the same picture on the other two indices as well. So that's that. Now return to our Aussie yen, which we looked at earlier. And as I said here, this looked like it was a decent hammer candle in terms of price action. There really wasn't an awful lot of volume underneath it. And I said, if you recall, it didn't we didn't get a V-shaped reaction. Beware of just one signal. It hit this resistance up here. Where is it? If this is going to carry on lower, if that is not validated, where is it going to go? Well, I have here the S4 of a Camarilla. That is definitely a price objective for this particular pair. But because this is driven by sentiment, what is happening, you have to see it in conjunction with what is happening on the indices as well. I have a Renko version of the chart.
what I've done here is actually running at 3.5. The indicator works out the optimum brick size, and this is where it actually stopped. This support platform here. So if it's going to go lower, it has to break through, and if it's going to go higher, it's obviously that is going to be a very strong platform of support, and hopefully move higher as well. Use a Renko always in conjunction with a time chart. And if we look at the 3-minute chart, what have we had? Well, we've had another sort of hammer come in now, this time with a half decent amount of volume underneath it. So possibly we could see that reverse as well. And that could be leading the way for the indices simultaneously. So that's looking at individual signals for potential reversals. Hammer candles, shooting star candles, candles with wicks are always very important in VPA, but you must read them in conjunction with the volume. Is the volume, is it supportive of the depth, of the wick of that candle? It clearly wasn't on this one here. At this point, it doesn't mean this is not necessarily going to reverse. It's just that this was a very premature signal, and there was insufficient buying to actually take it any further than this resistance here at the S3. And finally, this is something we've not sort of we don't really use very much, which is a shame because we use it. Not shame, we don't show it. One of the things we have to try and get a gauge on, get a feel for in the market is how fast is it? How much activity is there? When you have a time chart, what happens in that 5-minute candle? It will open and close at the end of 5 minutes, but you have no sense of whether there's been the buying and selling in there has been very frenetic, or it's been very, very slow and very measured. Now, the Renko, to a point, picks that up because a Renko brick is devoid of time and will only print once a certain number of pips go through the market. So you can eyeball it. You can see, well, there's only, if it's set at 3 pips and it takes 5 minutes for 3 pips to go through, well, there's not a lot going on. It's happening, but there's not a lot going on. So what we did, we wanted to be able to get a feel for, the kind of screaming and shouting that used to go on in the pits. So we developed something called a tick speedometer, and what it does, it measures how fast those ticks are going through, and it has a wonderful traffic light system in it. So when it is in this red, we know that yes, the price is moving, but it's very, very slow. That's quite important, because if you're in a position and the market just slows down, it just comes to practically a grinding halt, which it does at certain times of the trading day, coming to a close. There are quiet periods. If you're in a trade, especially if you're an intraday trader, your risk increases the longer you stay in that trade, because the objective is to get in, make your pips, and then get out, because the chances of something coming in and unexpectedly hitting that trade increase. So what this indicator does is, it doesn't mean you can't trade, it doesn't mean you can't take the signals if the analysis is good and everything else good. It just means that this trade is going to take a lot longer to develop. These candles here have taken from 4:30 to where are we now? 10 to 6, however many candles, but look at the number of candles between 5:30 and 6. It was in green, and they move very, very fast, and that's what this indicator does. It just gives us a sense of the level of activity that is going on behind the price action.